with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Chief Investment Officer at BIG Investment Services. That's BIG, Booth Investment Group. We're a full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. We like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, July 25th, 2025. Big shout outs to all the folks that have stopped by and said hello to us at the Delaware State Fair. It's good to see everybody. And of course, that leads me to say a big shout out to the folks that I've met at the Delaware State Fair many, many years ago. Folks like Diana and her husband. Good to see you this week. So having a good time out there. Good to see folks. And a couple of nights left, so stop out and say hello. Let's go and jump into the numbers. What's going on there with Mr. Market? Well, I can tell you what's going on. Mr. Market continues to dish out the pain. And what do I mean by that? Well, last week, we talked a little bit about the pain trade. That's when the market pushes up against the greatest number of people possible, right? Upsets as many people as it can. And right now, that pain trade is higher. The industry that I'm in, the professionals out there have been looking for a big pullback in this market. A lot of them are really upset. They've missed out on this push higher. They hunkered down for tariff situations back in March and April, and they just never changed course. So they're really being caused some pain right now by this onward and upward march of the market. And that's what it continues to do. Like the Dow Jones was up 1.2% this week. The S&P 500 up 1.4%, the NASDAQ up 1%, and the Russell Small Cap Index up 0.94%. So all the major indices continuing to push higher, to march on. Looking at the volatility index, that was down 9% this week. It's down at 14.9, getting down to that real complacent territory. But I can say this, it can go lower. Like I've seen it years past, 11, 12, and I've seen it stay down for a long time. So there's nothing that says the market has to have an upset apple cart anytime soon. As a matter of fact, I would say this. Some of the things that this market's done technically just in the past week would actually indicate that this can go on for a while longer. It may be a few more weeks even before this market takes the breather that people are looking for. And then it may not be much of a breather at that. So luckily for us, hey, it's no pain for us. We're fully invested. Let it go. Let it go higher. I'm good with it. Go ahead, Mr. Market. Do your thing. How about other things? How about the long-term bonds as measured by the TLT? Finally showing a little bit of a bid there, up 1.4% on the week there. So that was good to see that. And when you take a look at the sectors, I will say that everything for the most part had a really strong week, except for semiconductors. Not so hot there. You can really blame Intel for that. A couple of the bigger chip companies, Intel probably the worst as far as the report was concerned. So driving this space down a little bit, but the parts within the space, companies like NVIDIA, companies like AMD, which is what we have in the portfolio. We got AMD. It was actually up 6% on the week. So the sector was down 1%, but AMD was up 6%, looking pretty good there. And everything else was up quite a bit. Healthcare was up 3.5%, industrials up 2.3%, materials up 2.3%. So everything pushing higher there. And then gold and silver, gold down 0.3% on the week, silver up 0.1%, kind of mixed there between the metals. And they were kind of all over the place this week. They were up bigger earlier in the week, and then they drifted lower towards the end of the week. So what is moving markets this week? Well, a few things. Still a lot of headline-driven action there. I would say surrounding trade for sure. There's a few deals announced this week, Indonesia, Philippines, Japan. So the market really liked all of that. We have a sizable investment right now in Southeast Asia. So that news really helped to elevate that investment. It was up 2.5% on the week, thanks to those deals with Indonesia and Philippines. Other than that, we had some light economic data. I will say what we did get wasn't that great. New home sales, existing home sales, they were off. Fed manufacturing number was a little weak. The news that came out just wasn't all that great. but it was light news. It was news that market kind of was looking through and didn't get too upset about. Really, the big mover this week was earnings. Earnings continue to come out, and they continue to be better than expected. I won't say that it's a knock the cover off the ball, grand slam type of quarter, but it's definitely stronger than average. And the big news is that the earnings revisions to the downside are lessening at an even greater degree. So we haven't seen tremendous earnings improvement. We haven't seen a big boost in earnings, but the cuts are diminishing. And remember, we've talked about this before. The market usually makes its move ahead of the best news, right? It's going to move when the tide is turning, not when it's already turned and it's running strong. So we're seeing a lot of that right now. Now, moving forward from here, looking into next week, we still have a lot more companies going to be reporting next week, about 162 companies. And of those, you're going to have some big ones like Microsoft and Facebook and Amazon. So these can definitely be some market moving earnings reports. We'll see how they go. And it's going to be a big week next week for economic data, a real big week. We're going to have the job openings report, the ADP private payrolls on Wednesday. We're going to have the July non-farms payroll report, the big payroll number, and PCE, which is the number one metric that the Fed looks at for inflation. There's some other things too, like consumer sentiment, manufacturing numbers. And of course, the Fed's going to be meeting next week, right? They're going to have their meeting. And the question is, what will they do? Will they raise rates or lower rates, leave them the same? Jay Powell and Trump were in the news again this week with President Trump visiting the Federal Reserve building to review the overspend, supposedly, on the refurbishing of that building. But when all was said and done, Trump made no innuendos about firing Jay Powell. It seems like everything is going to kind of stay status quo for now. So next week, they do have their meeting. And I will say, based off what the Fed's been saying, the data that they're looking for and the data that we have, I don't think they're going to cut rates next week. Now, the Fed will get the July payroll number before the rest of us do. I'm sure they're going to have a good inclination of what that number is looking like. So that could change things if it's a sloppy number, but I don't think it will be. I think they'll probably hold tight. So we'll see how that goes. So a lot of stuff next week that can move markets around, earnings, of course, being the biggest driver. And look, things are looking good. Things are really holding together, looking very constructive, technically speaking, on the market. I think that this elevated state that we're in can last longer, can continue. I do expect a pullback at some point, but it may be later into August or September. We'll just have to see how it shakes out. Right now, this market just seems like it wants to go higher, and that's fine with us, right? Because we are fully invested, and that works. Let it go higher. Hey, one piece of housekeeping before I wrap up. The custodian that we work with the most is making a change to online access this weekend. So if you run into any issues when you're logging in, if you need information to get access online, don't hesitate to reach out to us. You can call our office and we will get you squared away on that if you need anything in that regard. So I'm going to go and wrap up. Between now and next 3 meetings, you're thinking about your future and long-term goals, all the things you want to do with you and your money. Maybe it's buy that new HVAC unit because the old one's just not getting the job done. Hey, maybe it is just buying a whole new house because the old one's not getting the job done. Hey, I don't know what your goals are. You do. So just think about it. Think big. Think BIG. And we will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.